Hey everyone, and welcome back to Investing Talk podcast. We've been seeing some pretty wild stock market action lately, especially with these growth stocks.
Yeah, definitely a lot of movement.
And you just can't talk about growth stocks right now without talking about AI.
Right.
The AI sector has just been on fire.
Yeah, it really has.
And speaking of companies that are attracting a lot of attention, one that we wanted to look at today is ScanTech AI Systems.
Okay.
Their ticker symbol is STAI. And they're kind of working in this space where AI meets practical solutions.
Interesting.
Yeah, so specifically in the areas of security and industrial automation.
Okay.
And they have been making headlines because of their stock performance.
Yeah, it's been quite a ride for them just this February.
It really has, yeah.
They saw a pretty big jump back on February 14th.
Yeah.
37.5%.
Wow.
And that was driven by news about some new partnerships they were forming and then also just some advancements in their AI tech.
Huh. And that was just the beginning for them, wasn't it?
Oh, yeah.
On February 18th, their stock just surged an incredible 72.44% during the day.
Incredible. Some reports even have it as high as 85%.
Wow.
That massive jump was really fueled by a big contract that they got with the Virginia Department of Corrections.
VADOC?
Yeah, to put in their fixed gantry Sentinel CT scanners.
Now, what is it about this VADOC deal that's so special?
Well, I think the biggest thing is that it opens the door to the correctional security market, which is a $1.5 billion industry.
Wow.
So that's a pretty big deal right there.
Yeah?
But, it goes deeper than just the size of the market because ScanTech is actually trying to tackle a problem that we've got, a very real problem. How do we prevent contraband?
Right?
Like drugs and weapons from getting into the more than 6,000 correctional facilities across the U.S.
Oh, wow.
So their technology is offering a solution.
Okay.
And that's what makes the VADOC deal so important.
So if ScanTech can, prove themselves with VADOC,
Right.
this could really be huge for them.
Yep.
I mean, potentially leading to even more contracts, especially within that group of about 300 correctional facilities.
For sure. I mean, success definitely breeds success, especially in this type of industry.
Yeah.
But I think what's really interesting about ScanTech is they're not just limiting themselves to corrections.
Yeah, that's right. They're already in other high-security areas.
Right.
I mean, they've got their scanners being used at some of Canada's largest nuclear power plants.
Yeah.
I mean, that really says a lot about, their reliability.
For sure.
The trust that they've built.
Absolutely.
And then on top of that, they're doing trials with the TSA at major airports.
Wow.
So clearly they've got a pretty big vision.
They do, and that's one of the things that sets them apart from some of those giants like an NVIDIA.
Right.
NVIDIA is kind of focused on those broad AI capabilities. But ScanTech is going for more targeted applications,
Interesting.
specifically in security and industrial efficiency. And I think that's smart because it lets them carve out their own little space, in markets that are ready for disruption.
It's a great strategy, and it's generating a lot of excitement. I mean, it kind of reminds me of the rise of NVIDIA.
Sure.
I mean, they've seen growth of 685% since 2022.
Yeah, that's incredible.
I mean, could ScanTech be on a similar trajectory, do you think?
There's definitely potential there, but I think we need to look closer at ScanTech's financials before we start making any predictions like that.
Okay.
That's where things get a little tricky.
Right.
So while they've definitely got the potential for growth, they're also carrying around $156 million in liabilities.
Okay.
And in their recent earnings report, they actually showed a net loss of $5.71 million.
So those are some red flags.
Yeah, definitely something to keep an eye on.
Well, their CEO, Dolan Falconer, he's been downplaying these recent dips in the stock price, and he's been attributing it to just the volatility that follows a de-SPAC transaction.
Yeah.
Remember, they merged with this PAC back on January 2nd?
Yeah.
And, Falconer's also blaming short selling for sure for these ups and downs, and he's reassuring investors that the company's balance sheet is strong.
Okay.
So what do you make of these explanations?
I mean, his explanation about the de-SPAC volatility, it's definitely plausible.
Okay.
When a company goes public that way through a SPAC merger, there often is a period of adjustment.
Right.
Price fluctuations.
Makes sense.
The market's trying to figure out the company's true value.
Yeah.
And then short selling can definitely make those swings even bigger.
Right.
But we can't ignore the fact that this stock has had some really dramatic moves.
It has been wild. I mean, they went from $2.05 on February 14th to $4.88 by the 20th.
Yeah.
That's a 170% jump in just 5 days.
Right. That's a lot of volatility, even if we can blame some of it on the short selling and the de-SPAC stuff.
Okay.
And I think what's even more interesting is the really high trading volume we've seen. And, there are these whispers about a potential short squeeze happening.
Now, can you explain what a short squeeze is for our listeners who might not know?
Oh, yeah, for sure. So a short squeeze happens when a stock that's got a lot of short sellers, basically people betting that the price is going to go down, suddenly the price starts going up rapidly. So as that price climbs, those short sellers, they have to buy shares to cover their potential losses, right?
Uh-huh.
Which pushes the price up even further. So it
Okay.
kind of creates this feedback loop.
Gotcha.
Now, ScanTech, they have a relatively small number of shares that are available publicly that's also known as a small float.
Okay.
And they have a lot of short interest. So
Mm.
that combination, it makes them a prime target for a short squeeze.
So if that's the case, could this momentum, keep going?
It's possible,
Okay.
the combination of all this positive news, the VADC contract, and then you throw in these short squeeze dynamics,
Yeah.
it could keep pushing the price up higher, at least for a little while.
Right.
But we also have to be aware that there's a potential for things to correct, maybe even sharply.
Right.
Things change really quickly on the market, so you got to be ready for anything.
So it's high risk, high reward.
Exactly.
Especially in this crazy AI world.
Yeah.
And ScanTech isn't the only company seeing this kind of jump.
Right.
The entire AI market is really hot right now.
It is.
I mean, Morningstar's top AI picks are all rated 4 and 5 stars.
Wow.
And analysts are saying this market could hit $1 trillion by the early 2030s.
That's incredible.
So you're absolutely right. The excitement for AI is definitely there.
Yeah, and I mean, even the competitor like BigBear.ai, their ticker symbol is BBAI.
Okay.
They've seen a 93% increase in their stock price this year.
It seems like everyone wants a piece of this.
It really does.
It's such a fascinating time to be watching all of this.
It is.
But with all this excitement around AI, it's more important than ever to be cautious.
Yeah,
approach these investments carefully.
You got it.
And, especially with ScanTech, we need to think about their financials before jumping in with both feet.
Definitely. Potential is one thing, but, sustainable growth, it requires a strong financial foundation.
Very true. It's a tough call, right?
Yeah.
Trying to balance that potential with the reality of their situation.
Mm-hmm.
It's really easy to get caught up in the excitement when you see those stock prices moving like that.
Yeah, definitely. And that's why it's always so important to do your research,
Yeah.
really understand the company, how their business works and what their long-term plan is.
Absolutely.
Don't just chase the hype, look deeper.
Exactly. And, that's what we try to do here on Investing Talk Podcast.
Right.
We want to help our listeners make smart investment decisions.
Absolutely.
By giving them more information and helping them understand the big picture.
For sure.
So for anyone just joining us, let's quickly recap what we know about ScanTech AI systems.
Okay, so basically they're an AI company. And they're working on some pretty cool technology with real-world uses in security and industrial automation.
Yeah.
And they just got that big contract with VADOC to install their fancy new scanners.
That's right, and that's got investors really excited. Their stock's been all over the place.
It has.
But like we talked about, their finances are a bit of a mixed bag.
Yeah.
Huge potential, but also a lot of debt.
Right.
So the big question is, will ScanTech keep this momentum going, or will all that debt catch up to them?
That's the million-dollar question.
Yeah.
And honestly, it's impossible to say for sure.
Right.
I mean, there are strong arguments on both sides.
Okay.
So on the one hand, you've got this market that's crazy for anything AI.
Uh-huh.
And ScanTech is in a great position to take advantage of that.
Right.
Their technology is solving real problems.
Yeah.
And that VADOC contract shows that they can land these big deals. So if they can deliver on their promises and, keep getting more contracts like that, the upside could be huge.
So it sounds like you're pretty optimistic.
I mean, I am, but let's talk about the other side, too.
Yeah, what could go wrong? What are some of the risks that could slow ScanTech down?
Well, like I said before, their finances are a bit of concern.
Right.
They have a lot of debt, and they're not making money yet.
Okay.
So if they burn through their cash too fast, or if they hit some unexpected bumps in the road, it could put them in a really tough spot.
So it's not just about getting the contract.
Right.
It's about managing their money well.
Exactly.
And dealing with the challenges that come with growing so quickly.
Exactly. And we can't forget about the competition.
Oh, right.
The AI world is crowded with new companies popping up all the time.
Uh-huh.
ScanTech has to stand out, keep innovating to stay ahead.
It's a tough game.
It is.
So with all that in mind, what advice would you give to someone thinking about investing in ScanTech?
It depends.
Okay.
What are their goals? How much risk are they comfortable with?
Right.
If they're more conservative, they might want to wait and see how things go over the next few months.
Uh-huh.
See how they handle their finances now that they're post-de-SPAC.
Right.
See if they're tackling that debt and moving towards profitability.
Makes sense. A wait-and-see approach could be good,
Right.
especially with all this volatility.
Exactly.
But what about people who are more comfortable with risk?
Yeah.
The ones who are drawn to that potential for really fast growth.
Sure. Well, they might find this momentum really hard to resist, and
Uh-huh.
maybe ScanTech will be that next big AI success story.
Yeah.
But they have to go in knowing the risks.
So basically, don't put all your eggs in one basket.
Yeah, exactly. Diversification is key.
Right.
Even if you're really bullish on ScanTech, it's smart to spread your investments around, different companies, different sectors.
That's high-rate advice. It's something we always talk about on Investing Talk podcast.
Yeah.
Building a diverse portfolio is crucial for long-term success. So as we finish up talking about ScanTech, what are the main things you want listeners to take away from this?
Well, I think the big thing is that ScanTech's got a really interesting story.
Yeah,
There's a lot of potential there.
for sure.
I know they're in a hot sector. They've got technology with real-world applications, and they've shown they can get those big contracts like with VADOC.
Yeah, I agree. It's exciting to see a company like this really pushing the boundaries of AI. But like we've been talking about, we got to balance that excitement with a little bit of reality, right? The financial risks are real.
Right.
And investors need to really think about those before making any decisions.
Absolutely. Don't get caught up in all the hype.
Right.
Do your research, understand the company,
Yeah.
and make smart choices that fit with your own risk tolerance.
That's what it's all about, successful investing, right? It's not
Yeah.
just about picking the next hot stock.
Right.
It's about understanding the business, the market, and the risks.
Well said.
Yeah. And speaking of understand the market, we want to thank all of you for listening to Investing Talk podcast today.
Absolutely.
We love helping investors like you navigate this crazy world and make better decisions.
Yeah, we believe that knowledge is power,
It really is,
especially when it comes to investing.
for sure.
And we want to give you the insights you need to stay ahead of the game.
That's right. We've got more great episodes coming up, so make sure you hit that subscribe button so you don't miss out.
Yeah, and if you found this episode helpful,
Yeah.
share it with your friends, your family, your fellow investors, anyone who could benefit.
Absolutely. The more informed we all are, the better.
Exactly. And don't forget to leave us a comment. Let us know what you think, what questions you have.
Yeah, and what companies you'd like us to cover in future episodes.
For sure.
All right, until next time, happy investing, everyone.